Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. Italy sells 20 and 23 growth forecast but says public finance improving. Rome, Reuters Mario Draghi, outgoing Italian government on Wednesday, shelled next year's economic growth forecast to 0.6% due to sky-high energy costs but said strong revenues would still ensure an environment in public finance. Gross domestic product into Eurozone's third largest economy will decline slightly over the second half of this year, a government statement said. The new growth projection underscore the economic headwinds facing Giorgia Meloni, who led a right-wing alliance to victory election on Sunday and is expected to be named Prime Minister next month. The Treasury Annual Economic and Financial document (DEF) and said GDP would expand 3.3% in 2022, up from 3.1% forecast set in April, thanks to beyond growth over the first 6 months. The 0.6% forecast for next year signals the dramatic worsening in the outlook compared with the previous goal 2.4%. Draghi has already earmarked some 66 billion euros, 64 billion since January, to try to solve the energy crisis exacerbated the Ukraine war. His successor will probably have to move along the same path. Now serving in a caretaker capacity, Draghi penciled in the forecast under an unchanged policy scenario. Meloni may set new targets shortly after taking office if she believes her promised tax cut and spending measures can stimulate the economy. Deficits debt to fall. Despite the weakening growth outlook, record high inflation is helping to bring down Italy's huge public debt as a proportion of nominal GDP. At the same time, the surge oil in gas prices is boosting revenues from value-added tax and excise duties. The EDF sees the budget deficit at 5.1% of GDP in 2022, sharply down from a previous target of 5.6%, while the forecast for 2023 is cut to 3.4% from 3.9%. This gives Melanie room for expansionary measures were around 0.5% of GDP this year and next without raising the deficit levels above the previous targets. The forecasting document says the fiscal gap declining very gradually to 3.2% in 2025, still above the European Union's 3% ceiling, which has been temporarily suspended to help the bloc's economies recover from the impact of the COVID-19 pandemic. Italy public debt, proportionally the second highest in the Eurozone after Greece, is seen at 145.4% of GDP this year, down from a previous forecast of 147.0%. It is targeted to decline to 143.2% in 2023. Inflation measures using the consumption deflator is seen averaging 6.6% this year and 4.5% in 2023. The DEF also said that Italy had so far managed to spend around 21 billion euros of European Union pandemic recovery funds, that leaves a further 170 billion still to be invested through 20 and 26, provided Rome can meet the policy targets and milestones agreed with Greece as a condition for disbursing this money. Italy gives final approval to justice reform to ensure EU funds. Rome Reuters Italy cabinet on Wednesday gave its final approval to a broad reform of the justice system needed to keep European Union funds flowing, the Italian Justice Ministry said. The reform has been among the most controversial of Prime Minister Mario Draghi premiership, and its main aim was speeding up the country, notoriously slow judicial proceedings and issues seen as deterring for its investment and growth. I think that's all from me. Don't forget to like, comment, share, and subscribe.